A very warm welcome. Before we look at this week's calendar, why do we look at calendar events ahead of time? It's because when we look at the calendar, we can find superb and top trading opportunities before they occur. Now, in this instance, earlier this month, we saw a great opportunity when we had very strong US jobs data and we had weak Canadian jobs data. Now, given where the Fed were and given where the Bank of Canada were, this was a great potential divergence between the US dollar and the Canadian dollar. So a strong non-farm payrolls print was a big boost to the dollar because it meant the Fed were less likely to need to cut interest rates this year, whereas the miss in the Canadian employment data, and you can see it came in below market's minimum expectations, and the unemployment rate came in above market's maximum expectations. So a very dovish print, even as the headline number and the unemployment rate came in within range, but the headline above market maximum expectations. So that gave us a clear dollar CAD buy bias. So we knew that there was a very high probability of the dollar CAD moving higher for a period of time. And we can see we took a great opportunity there on the dollar CAD. You can see for 15, 30, 45, for around an hour, the dollar CAD was just moving high. And obviously you can't get in at the bottom, you get in around the top depending on where your fill is and how long it took you to enter. But bearing in mind there's a 15-minute candle, there's more than enough time for a high probability scalp. That's why we look at these risk event opportunities to take high probability short-term trading opportunities. Welcome to the week beginning Monday, the 22nd of April. Now, we are entering, as of the 20th of April, the Fed's blackout period ahead of their May the 1st meeting. And this week we have the PCE print, the Fed's preferred measure of inflation. So that's going to be the main event for the week. Before we get into the economic calendar, we also need to be aware that there is geopolitical risk swirling around markets. In particular, at the time of making this video, there is heightened anxiety regarding Israel's potential retaliation against Iran in case it increases. We have had an attack on a military base in Isfahan, and that was seen as Israel making a message to Iran that if they want to attack Iran's nuclear program, they can. So at the moment, that seems to be the end of the geopolitical risk. But just remember, here's a key chart to look for. If we do see geopolitical risk flare up, you can see that this is the time of the attack, early Friday morning. And what we can see is the typical risk reaction in assets. Swiss franc gaining, yen gaining, the dollar gaining, and the Antipodeans, the Aussie, New Zealand dollar falling. Now, typically, the Canadian dollar would fall alongside with the Aussie and the New Zealand dollar. But because of the spike in oil prices, particularly due with concerns about the Straits of Hormuz being blocked if there is a further conflict in the Middle East, that meant that although CAD would find sellers as a commodity currency, it also found buyers due to the surge higher in oil prices. So just remember that's the sort of reaction expect. We also saw gold prices tick up, equity markets sell off. We saw a little bid come into bonds, and the surge in oil prices on the geopolitical risk. Just remember that if there is further tensions in this coming week, that's the likely reaction. Gold upside, oil upside, Swiss franc, yen, dollar upside, Aussie, New Zealand dollar downside, stocks selling. So just keep that dynamic in mind. With the Fed's blackout period, the big picture in terms of the Federal Reserve, of course, is that markets now see the Fed being higher for longer after the very hot CPI print we got on the 10th of April. If you just look at the dollar here, you can see this big bid that came into the dollar just as markets thought, okay, the Fed won't be able to cut rates 3 times as they signaled in their March projections. If you have a look here, you can see the Fed's March projections. They projected 3 interest rate cuts this year. That is being priced out. You can see that with sudden dollar buying. The weak dollar bearish bias still remains in place, but we're seeing a little bit of pullback And the question remains, how likely are the Fed to cut this year? Will they cut once, twice? Will they cut not at all? They're the sort of questions that are being asked, and the PCE data this week is going to help answer that question. So without further ado, let's get stuck into the calendar. Just going through the calendar, we can see that it's a pretty slow start to Monday. We've got some Canadian data out, but that's unlikely to be that significant for the CAD. Bank of Canada, of course, looking to cut rates in June. That sort of is alive after last week's weaker Canadian CPI print. Australian PMI data, not expecting that to move markets much because the inflation data out this week is likely to be the bigger mover on the Aussie dollar, which we will cover in a little bit. Now, the French, German, Eurozone PMI prints, yes, that is a flash reading, but I see very little scope for big reactions in the market here. If we see a very weak print, well, that just keeps the June rate cut that's expected from the ECB alive. And markets have been expecting that for some time. We can see that the euro is heavily sold in the CFTC report, that extended selling dynamic remains the case. And that's been expected, that's being priced in. We're seeing the euro US dollar drop lower. It is a sell on rallies, but is this going to change anything? Even if it's very low, unlikely. Also, if it's a bit higher or higher than markets are expecting, does that change a June rate cut? Probably not. So I don't really see much of an opportunity here for these PMI prints, which you normally potentially would. We'll have a look at it nearer the time, but at this stage, I don't see this moving the euro much either way. We've also got UK flash PMI prints. Now, I think this could move markets, could move the pound. And in particular, we could look for a euro pound opportunity if we do see firmer euro data and then weaker PMI data for the UK. Bank of England, Bailey speaking last week, he seems to indicate that he's encouraged that inflation is moving in the right direction. Bank of England's Green was encouraged as well. They weren't worried about the slightly firmer wages and the slightly firmer inflation. Certainly, they didn't voice those concerns to the market. So, if we see a big miss in the data here, then I would look for more euro pound upside. You can see the euro pound as of Friday is trying to put in, a significant reversal signal. You see a big bullish engulfing bar. You can see a big support level around that 8,550 region. And you can see that the yield spread, although it's been dropping lower recently, the yield spread between the German Bund and the UK gilt is still broadly trending higher. So higher prices do make sense. And one opportunity to potentially look for is a breakout of that 8,574 region if we do see a miss in the German Eurozone PMI prints and a beat in the UK data. So although the Euro data in and of itself is probably not a great opportunity, in conjunction with the UK data, we could see a potential Euro pound upside. We'll cover that nearer the time. Later on, we got PMI prints out for the US. Could see some moves on an out of consensus print, maybe a short-term opportunity there for a little bit of dollar upside if we again come in above market expectations. We'll get the updates later in the week for the low and the high consensus. In the early hours of Wednesday morning, we have the hotly anticipated Aussie CPI data. Now, this is more interesting. At the last interest rate meeting, the Reserve Bank of Australia have moved to a situation where they say that the board's not ruling anything in or out on interest rates. Now, previous to the March meeting, they said that a further increase in interest rates can't be ruled out. But now they're sort of saying, we can't necessarily rule out an interest rate cut. So they're saying they're in the balance. So the CPI data could really move things. Now, the RBA's Governor Bullock, she said that inflation is still too high. That's the headline 4.1. That's the core 4.2. It's double the RBA's target, so it is still too high. And if we look at the expectations, we can see that the headline is expected to come in for 3.4, so a drop lower, and the core is expected to come in at 3.8. So it's expected to start moving in the right direction lower. So if we see this come in below market's minimum expectations, then that will move the RBA more contentedly towards potential rate cuts. If we just look at the RBA, we can see that at the moment, the meeting 7th of May, 10% chance of a rate cut. If we saw a big miss in the CPI data, we'd expect that to shift. And 4.35, the first interest rate cut is currently seen in November this year. So if there's a big miss in the data, that could be brought forward, and that could give us an opportunity in the Aussie New Zealand dollar upside. So that's definitely something to be looking for. You can see Aussie New Zealand dollar trying to break through that trend line, moving flat and sideways. We had inflation data out of New Zealand last week. It was sort of pretty much in line with the headline, but analysts, economists were digging down to the detail, and the concern is domestic inflation is still a bit high. So that's just giving the Aussie New Zealand dollar sort of sell on rallies. It remains to be seen where we go with this. But if you look at the yield spread, see the yield spread is pretty flat as well between the Aussie and New Zealand. So it needs a clear direction. And you could get a clear direction from any divergence here in the Aussie inflation. So I see two-way opportunities here, particularly against the New Zealand dollar. It's definitely one to be looking for. German data could be interesting for the euro pound, depending on what happens with Tuesday's data. We'll update you there, but that's definitely worth thinking about. And CAD retail sales, Bank of Canada, they're on target for a June rate cut. If you saw a big miss in the retail sales data, then you can see a little bit of CAD downside, so it could give us a nice dollar CAD spike. Definitely one just to not let slip through next week. Going through to Thursday, GDP advance. Now, expected to come at 2.1%, down from the prior of 3.4. If you look at the last projection from the Fed, expecting GDP to be at 2.1, up from the December projection of 2024. So, firmer inflation data is likely to lift up, not inflation, firmer GDP data, obsessed with inflation like the rest of the market. Firmer GDP data is going to result in further upside in the dollar. So if this comes in, hotter, above 2.4%, 2.5%, it will justify the higher for longer rates narrative. Dollar strength, not one to miss. Then we've got PCE data on the Friday. It's the Fed's preferred measure of inflation, hugely important and the best opportunity of the week. If we see this come in above markets expectations, then investors will start thinking, well, maybe the Fed is going to cut once or not at all this year. A high print here, something that's really knocking on the door. 2 point, if it's heading above the prior reading, we start heading to 3.1. That's going to be worrying markets. We'll get the projections up as they come in later during the week. And University of Michigan sentiment final print, unlikely to move markets. It's the final print. So this is the major event of the week. It's one not to miss. We'll be covering that live, of course, as always with these major live risk events. And dollar CAD longs could be fantastic on a strong print. If we saw a big miss in the data, then we'll see a lot of relief, and you'd see some soaring upside in the euro-US dollar pair. That's all for now, folks. We'll be updating throughout the week. And don't forget, these high and low forecasts, they're super important, but they will update as we go through into next week as for various analysts' reports and surveys come in. So I hope you have a very good trading week.